Hello and welcome to the first video on this channel. Today we will explore the Elliott Wave theory, its underlying principles, different patterns and practical applications in trading. Elliott Wave theory, developed by Ralph Nelson Elliott in the 1930s, suggests that market price movements are not random, but follow a repetitive pattern of waves, consisting of impulses and corrections following each other. The price movements are influenced by the psychology of market participants and collective human behavior, from being hopeful and optimistic all the way to euphoria, before the market gets a crash or a pullback. Then anxiety and pessimism is present and goes until disbelief, before the cycle repeats from the very beginning. But for what are Elliott waves? The theory itself is for interpreting market behavior and understanding why the price is moving in a direction it is moving. Also, relevant levels, which might turn into potential turning points, can be tracked and anticipated. The Elliott Wave principle per se is no trading strategy, but rather a risk management tool, which helps you to understand how high risk and opportunities are in relation to each other. It also helps you to recognize the different patterns in the current price structure and allow you to easily compare different scenarios and their likelihoods of playing out. Therefore, the identification of trends will be much easier, and when a trend breaks, you can adapt quick and not be stressed. In the best case, you already have an alternative scenario ready. This is also a prevention from losing trades and a good way to measure, track and reduce your very own risk. But before I'm going to show you how the basic pattern looks like, a quick disclaimer. The following sketches are not real. That does mean, in reality, charts look more complex and messier, but for the basics, it is easier to learn from such a chart instead from complex ones. Later in this video, I will still show you some examples from real charts. First of all, the basic pattern consists of 8 waves in total. The first part is the impulse, consisting of 5 waves. It goes in the same direction as the wave of a larger degree. The 3 waves after the impulse are the correction. It goes in the opposite direction as the wave of a larger degree. In theory, a basic pattern looks like this. It is important to know that waves 1, 3, 5, A and C are always the impulse waves, and wave 2, 4 and B are the corrections. As I already said, the first 5 waves are part of an impulse, a wave of a larger degree. They are labeled with the numbers from 1 to 5. Then there are 3 waves of the correction, going in the opposite direction, labeled with A, B and C. Now you can see the single larger degree wave 1 in clamps, with 5 waves in the substructure. In that, the smaller impulse, wave 1 in a green circle, looks exactly the same as the larger wave 1, just on a smaller degree and a smaller time frame. Larger degree wave 2 in clamps instead has only 3 waves and goes against the trend on a greater degree. Because of the fact it only has 3 waves, it has to be a corrective pattern. It is important to know that wave A and C go in the same direction as the larger degree wave of them, in this case wave 2 in clamps. Therefore, they have to be impulse waves too, because they move in the same direction as wave 2 in clamps. Wave 2 in a red circle looks also the same as this larger degree wave 2 in clamps, after the same principle I already showed you with wave 1. In this wave pattern, you can already see that wave 2, circled in red, is against the trend of wave 1 in clamps and therefore has to be a corrective wave. Still, waves A and C of wave 2 move in the same direction as wave 2. What I want you to learn from this is that it is very relative if a move is impulsive or corrective, and always depends on the wave you're comparing it to. For example, wave A and C in red wave 2 are impulses if you compare them to wave 2, but are part of a correction if they are compared to wave 1 in green. Now you can see the basic pattern in more detail. All waves marked green are impulsive waves. The red ones are corrective. If we now count the microstructure, it gets clear that waves 1, 3 and 5 consist of 5 waves each, and waves 2 and 4 only of 3. That proves that all impulses have to be 5-wave patterns, and all corrections are 3-wave patterns. As mentioned before, wave A and C are part of a correction, but still move in the same direction as wave 2 in clamps, so they have to be impulses too. That means that every wave that moves in the same direction as a wave on a larger degree has to be an impulse wave, no matter if it's a wave 1, 3, 5, A or C. Therefore, wave 2, wave 4 and wave B have to be corrective waves, because they always move against the wave of a larger degree. If we now zoom out, the chart looks like this. The same as before, but on a bigger time frame, and also the waves are on a larger degree. Still, the pattern remains the same and always will. It only gets bigger and bigger and can go so far that a single wave can last for centuries or even longer. In the Elliott wave theory, all patterns have to fulfill different rules in order to be valid. In impulses, wave 2 must not break below the starting point of wave 1. If it still happens, the correction might not be finished yet. In some very volatile and leveraged markets, for example in crypto, if only a small spike breaks below the recent swing low of the beginning of wave 1, it would be okay. But you have to be very cautious if something like this happens, because other patterns may be more likely. Also, wave 3 must not be the shortest, and is preferred to be the longest wave. Most times, wave 3 is where the money hides, because third waves are likely to extend and to be aggressive, and are the very thing you are trying to trade. Lastly, wave 4 is not allowed to break below the swing high of wave 1. Now we are looking at the Bitcoin chart. This is the bottom from the last cycle. It ended in November 2022. And now I'm going to label it for you. So this is the first wave, wave 2, wave 3, wave 4 and wave 5. This would be the impulse of the larger impulse. For example, wave 1. In this case, wave 1. And then after this comes wave 2. Normal correction. And in order that this even can be an impulse, as I already told you, all rules must be fulfilled. So now we look if it actually is fulfilled. The swing low and the beginning of wave 1 didn't break by the move of wave 2. So that's the first rule. Then the third wave clearly is the longest, quite aggressive. And also wave 4 didn't break the swing high of wave 1. So all three rules are fulfilled and therefore it can be a valid impulse. Corrections must not go lower than the impulse from before. That means that, for example, wave 2, a correction is not allowed to break below the beginning of wave 1, as you already learned in rules for impulses. However, an impulse of a smaller wave degree can be broken, of course. Because corrections are always in 3 waves, a 5-wave move to the downside is never the full correction, but rather a part of it, for example, a wave A, because A waves are moving in 5 waves. So here we are on the Solana chart. This was the top of an impulsive wave, so the next move has to be a correction, labeled with A, B and C. And as you have already learned, wave A and wave C is an impulse 2. So that means they are consisting of 5 waves. There we can count the first 2 waves, then a large third wave 4 and wave 5. And then also in the C wave, the 5 waves, 1, 2, 3, 4, and 5. Now you can argue if the third wave is here and the 4 here, or here. Both is possible, both are valid scenarios. Yeah, that's just not the problem, but something where the Elliott wave theory gets more complex, because often there are more possible scenarios which lead to the same outcome short term, but can possibly change something on the long term. And to finish this correction, I am labeling the A, B, and C correction in wave B, because this is the correction in a correction, and therefore has to be a 3-wave move. Elliott waves are not only consisting of impulses and corrections. Also different alternative patterns for impulses and corrections can occur. Alternatives of impulses are diagonals. They can be found as leading diagonals and ending diagonals. Leading diagonals have either a 5-3-5-3-5 pattern, the same as an impulse, or a 3-3-3-3-3 pattern, which means that wave 1, 3, and 5 are only in 3 waves, similar to corrections. Therefore, they have corrective character and are moving slower, more sideways, are less reliable and messier. They also often move in channels and can only be found in wave 1 or A. The brother of the leading diagonal is the ending diagonal. They can only become a 3-3-3-3-3 pattern and often occur after rapid and fast price actions, for example after a very extended third wave. They also move in channels and can only be found in wave 5 or C. Now we are on the Matic chart. This is the bottom of a wave 2 on a very large degree. So from here it has to be impulsive again, or at least some sort of impulse. And here we are dealing with a leading diagonal. 1, 2, 3, 4, and 5. It's a leading diagonal because all the impulsive waves, so wave 1, 3, and 5, are not impulses but corrections, or 3-wave moves with A, B, and C. You can see in cyan. Because wave 1 was in 3 waves, also wave 3 has to be in 3 waves. That means that, yeah, there was quite a double bottom, so it's difficult to say which of these is the actual low, but it doesn't matter now. And I assume that the third wave looks like this. So 3 waves in wave A, shallow B wave, and quite aggressive C wave. And yeah, overall wave 3 was quite aggressive. And then again 1, 2, and 3 in wave A, wave B, and wave C. So that means that this is a leading diagonal. In this case, a trend channel would look, yeah, pretty not accurate. So if the price, yeah, would form a channel, wave 3 would be here, wave 4 here, and wave 5 here. It's not always the case, but it could possibly be the case. So what we now can do is draw a different channel looking like this. And yeah, again being disappointed because the channel didn't work. It only didn't work because wave 3 was, yeah, very aggressive. Here we are on the Solana chart. This is the top of a former impulse wave, so this has to be the correction, and this again is the last bit of a larger degree impulse. If I label it, I would label it like this: 1, 2, 3, 4 and wave 5, because wave 1 is a ABC move like this, very messy to be honest, but because this is a 3-wave move, also wave 3 is in 3 waves. Here you can label it as an A, B and C. Still, wave B is quite shallow and that's not very reliable, but it is how it is. And also wave 5, now the clearest move of all of this, is a clear ABC. If we now try to draw a trend channel, I'm going to the top of wave 1, going to wave 3. Yeah, so wave 4 is not as deep as it should be, or how the trend channel would like it to be. And if we now, but you can see that it's very accurate. The price never breaks out until here, but then the correction on a larger degree started. If we adjust the trend lines a bit and delete this, we see that wave 5 didn't touch the channel. Okay, there was a bit missing. That means that the price or the market was tired, and it was due that the correction is incoming. And then comes the part of the Elliott wave theory which is more complex: the variations of corrections. It can be distributed into 3 large sections. The first one is simple freeze. These are the basic correction, consisting of zigzags, flats and triangles. Then there are double freeze, longer and more complex structures with double zigzags, double flats. Additionally, there are zigzag triangles, zigzag flats, flat zigzags and flat triangles. It is important to know that triangles can only be seen in the last part of the correction. Lastly, there are triple freeze, combinations with 3 parts. In these, only 4 patterns are possible: triple zigzag, triple flat, zigzag flat triangle and flat zigzag triangle. Except for the triple zigzag, only 1 zigzag pair combination is allowed to occur, and again the triangle is always in the last position. Generally, zigzags are the most sharp corrections, while flats and triangles go more sideways. But because of the fact that this video would take too long, I'm going to make a video on every possible pattern there is in the Elliott wave theory as a single video, explaining it in more detail and with examples from real markets. For now, this is all I have to say about this very interesting theory. I hope you have learned something and now know more about the theory and how it works than before. If you have any questions, please let me know in the comments below. Thanks a lot for watching and see you in the next one. Bye.